Stress we're seeing across the regional banking sector. That's why we want to break it down for you. And we're going to do this all week long, from buyers to builders to inventory and investors. We'll go local to open houses across the country and have special guests to talk about all of this. And of course, along the way, we're going to bring CNBC's real estate correspondent, Diana Olick. She's here now to kick it off with an overview of where we stand today. Diana, so great to have you here. Good morning.
Good morning, Frank. Yeah, housing is not starting spring on a great foot, and I'm going to explain by taking you through a lot of numbers, so get ready. Starting with mortgage rates, of course. They've been on a wild ride, with the average rate on the 30-year fixed peaking last October, pulling back in January, spiking in February, and now back down a bit thanks to the banking stress. Rates are still, however, 2 percentage points higher than the start of last spring, making the monthly payment on an average home just over $400 more than a year ago. And home prices, well, they've pulled back a bit, some since last summer, but nationally they're still up just over 5% from a year ago. Now, some people are predicting they will go negative annually, but CoreLogic is saying they'll still end up this year up 3% from last year. Prices are stubbornly high because there's barely a 3-month supply of homes for sale. 6 months is considered a balanced market. And new listings at the end of February were down 16% from the year before. Now, the home builders, well, they should be helping, right? Builder sentiment has now gone up for 3 straight months, with builders claiming they're seeing more sales, and Lennar reporting strong quarterly earnings last week. They said sales continued in February, but, and this is big, they're just not building enough. Single-family housing starts rose just 1% in February month to month, and were down 32% from the year before. Permits were a little bit stronger, but still far lower than last spring. So that's the big picture. And again, a lot of numbers. It still remains to be seen how the regional bank stresses will impact mortgage rates going forward. For now, it's mostly impacting credit availability for jumbo loan borrowers and who use regional banks. But bigger picture, overall concern in banking will impact already very weak consumer confidence in the housing market. Frank?
Yeah, certainly something to watch, Diana. We're looking forward to your report tomorrow. Thank you very much for this report. All right, let's continue this conversation about the outlook for housing and if a reset is on deck. Let's bring in Logan Mohtashami, Housing Wire lead analyst. Logan, great to have you here.
It's great to be here.
All right, I think the natural jumping off point is where Diana left us. Everything we're seeing with the regional banks, how does that impact the housing market?
Well, obviously, anybody that's tied to lending in the regional banks will see stress. But luckily for us as a country, Freddie and Fannie are still in conservatorships. If they were publicly traded companies, we might be talking about a much tighter housing market right now in terms of credit. But they're in conservatorship. They're the big 2 giants in lending. Really, the housing market is where the 10-year yield goes, where mortgage rates are going. If they go up, we've seen the data get worse. From last November, December, January, when they started to fall down, we saw forward-looking housing data get better. Okay. The existing home sales report that's coming should be good this time. All
right, Logan, so I think you led me to my next question. We've seen rates decline in recent weeks. How is that going to impact the housing market, especially this spring selling, spring buying season, where a lot of people are looking to make that transition, especially if you have kids? You want to make this move in these months so that everybody's set for the school year coming up.
Well, when rates went up from 6% to 7%, we saw 1 month of negative purchase application data. The last 2 weeks have gotten better as rates have fallen. So basically, follow where mortgage rates are going, where purchase application data going, and look out 30 to 90 days. There's your housing story right there. So tomorrow's report should be fine. The next few reports might not be that great, but if rates keep on going lower and lower, it'll be better for the builders, it'll be better for home sellers that want to buy, and for the overall housing market.
All right, so where's inventory at right now? I mean, just a couple of weeks ago it was historically low. Where do we stand now?
We're still historically low, except active listings are higher than what we had last year, but still it's an affordability issue. So yes, total active listings are low. New listings data is declining year over year. So the product that's available out there historically is not a lot, but the affordability issue overrides that. So if pricing doesn't explode higher, it's 100% about affordability, not about supply.
All right, if anybody follows you on social media, you love to post charts. You're definitely a chart guy. Diana said her data shows that prices could move about 3% higher this year. What are your charts? What's your data showing you? I think a lot of people have their fingers crossed to hear you say that the prices are actually going to go down.
Prices should decline if mortgage rates stay above 5.875% all the way around, but not by much. This is not the housing market of 2007. We had 4 million active listings in 2007. We're less than a million today. So much different marketplace. Affordability over supply now, not the 2008 housing market. No distressed sales. Homeowners are in very good spot right now. They don't have to be forced to sell anything. And they are very, very stubborn right now. This is a benefit to the home builders, by the way. The builders don't have a lot of competition. So you see their stocks doing better, and their sales have picked up recently.
Yeah, it's hard to move when you have a low mortgage, when you're going to have to buy at a much higher mortgage.
It's true. And also the best hedge on planet Earth is the 30-year fixed mortgage in the United States of America. So homeowners are doing much better than people thought.
All right, Logan, we got to leave the conversation there. Thank you again for your time. Logan Mohtashami, appreciate the insight. All right, ahead here on WEX. We're looking at the futures right now, and a bit of a surprise right now. We're seeing the NASDAQ actually turn to the positive. We are well off of our lows for the S&P and the Dow Jones. Right now, the Dow Jones like it could open up about 60 points lower. At one point, it was over 100 points lower. We're going to bring in Veritas Financial's Greg Branch. He's going to give us his insight on this.